If I girl, I swear I love you. Anything I can do for you, yeah. You are the only one for me. If I'm boy, I swear I love ya. I can't do without ya. I said, baby, you are the one for me. I swear, to my mind to do it all. You find ain't nobody better but that only you. I take it to the altar, baby. Baby, oh. I swear to my mind to water. Boy, you bad and you make me mellow butter. That only you are taking to my papa. Baby, oh, baby, oh. My beauty not play. Jada Carlo in my hand, you got to spare. You sweet pass, get away. My me. You now feel in my brain, then you just grab my head. Enough for nothing. How you make me say, Musondifa, la 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 la. Money comes on, la la la, la If I girl, I swear I love you. Anything I can do for you, yeah. You are the only one for me. If I'm boy, I swear I love ya. I can't do without ya. I said, baby, you are the one for me. Yeah. I swear, to my mind to do it all. You find ain't nobody better but that only you. I take it to the altar, baby, oh. Baby, oh. I swear to my mind to take water. Boy, you bad and you make me mellow butter. That only you are taking to my papa. Baby, oh, baby, oh. You got me like ooh, ooh. I love you, baby. Ooh, ooh. I love you, baby. Pull up to my bumper, baby. And you know I like it when you play with me. Never now you say, cause you let me go crazy. They say, if I had been there, I would break my back. And when he eat it, he can never want to leave it. Running home to mama, now they call you woman lover. You and me, baby. All I need, baby. I say it's you and me, baby. All I need, baby. You I live my life, never leave you. I will not leave you. I say, boy, you live for me. Oh, and I will never leave you. You I will never leave you. I will never leave you. If I girl, I swear I love you. Anything I can do for you, yeah. You are the only one for me. If I'm boy, I swear I love ya. I can't do without ya. I said, baby, you are the one for me. Yeah. If I girl, I swear I love you. Baby, you are the one for me. Yeah. On records.
Hello and welcome to another edition of Africa Teaching, a production of the Pepperbird magazine. I'm Karen McLaurin Chesson, your host. Today, we have the pleasure of interviewing Karley Carto from Carto Financial Group. And he will offer information on, I wanted to say financial planning, but it's really not just financial planning, but he will also be giving you some background on what wise financial decisions. Karley, thank you for joining us.
You're absolutely welcome, Karen. Thank you for having me. Thank you, Africa Teach. Thank you for being so gracious to have me come out and just share a little bit of what I've learned over the years.
Yes, well, I can recall us sitting in the yard and talking about some very important points that are helpful for people, young people, middle-aged people. You're never too old to get it right. And, we're delighted that we have you to give us advice. And you have to be open enough to be candid. That's one thing.
Yeah, absolutely.
In dealing with financial planning. But at any rate, Karley, please tell our viewers a little bit about yourself.
Absolutely. As Karen already mentioned, my name is Karley Carto, oftentimes known in the community as Casey. I'm originally from Liberia, migrated to the United States, where I grew up right here in Rhode Island. Went to school for marketing, and actually tripped and fell into finance. Always was phenomenal with my money. Kind of put myself through school, scholarships, working, investments. I read a lot of great books, and that kind of created the foundation of me entering the field of finance. Currently to this day, I'm a real estate investor at night, and I'm a financial advisor during the daytime running my financial firm. I have my Series 6, 63, 65 life health insurance licenses, so I'm pretty qualified to speak in the terms of investments and also real estate. So yeah, that's pretty much me in a nutshell. But I think in the beginning you just hit a very key point, which we have to always be open to investment ideas. If you ever run into anyone, encounter anyone who feels like they have everything mapped out, you should probably run the other way. Laws are always changing. Investment vehicles are always changing, so it's always good to do your research on individuals that's giving you the advice, but also the product or the investment vehicle in which they're recommending, and that using that as your foundation to being able to receive information.
Right.
It would take you a long way.
Well, now, I think about what type of things young people, we're talking about, I hate to categorize it, but our viewers are probably younger folk, and I'd be interested in you sharing with them some things that they could do in order to be on the road to financial stability.
Absolutely. The three core things I always try to tell individuals who are in the generation of millennials or Generation X, meaning anyone from age 18 to roughly around millennials and around 34, 35. But I would even go a little bit further to say around 40.
Okay.
First thing first, if you're working, you're in a career, in a job, just participate in your 401k. Defer your money. I tell everyone your money's more important tomorrow than it is today.
Right.
And we have these habits of spending excessively on things that we truly don't need. It's things that we want. And then I'll talk a little bit later on about income tax money and all the money that you receive back from the government that they didn't give you any interest on, and you just go back and you blow it. But definitely participate in your 401k. If they offer it, just defer your money, put money away. Let your money build compound interest over the years. Second thing is,
and if they don't offer it, they need to talk to you.
Absolutely.
So that you can get them into
and get you enrolled. Yeah, just because your employer don't offer doesn't necessarily mean you can't create one.
Okay.
Banks offer it. Different financial institution offers it. I think even credit card companies started offering now. When I was doing some research last night,
The second type of investment vehicle I think every young individual should have is life insurance.
Okay.
People fight me about it all the time, but they don't understand just the benefits of life insurance. And there's different forms, and we can get into that. Probably another segment. I think a segment by itself, we can just focus on life insurance, but that's a second investment.
Right.
And then the last and final one is real estate. Purchase yourself a home. If you're renting out there and you're paying $900 a month for rent, you times that by 10 months, you're spending $9,000. Times it by 12 months, that is 9,000. No, that's 10,000 and change, 11,000 and change that you give away on an annual basis. If you make $30,000 a year, you just gave away 1/3 of your income to your landlord. If you simply get yourself a mortgage, you can stop paying down a loan against a house, which at one point in time you can go back and borrow it against. Right? The two fundamental principles I tell and teach every single one of my clients is: A, don't make an irreversible move with your money. Right? I have an issue when I give my money and there's no way, shape, form, or fashion I can receive it back. I live a very modest life. I don't purchase a lot of things. I don't think I need a lot of things. For example, what that means also is you can turn around and have cable and give your money to the cable company $100, but the 1 month you may not have any money to give the cable company, you can't go back and ask them for your money back.
That's right.
All right? And think about the thousands and thousands of dollars in which we actually not lose, but we're giving it out freely to the cable company. Don't make an irreversible move with your money. If you're giving your money out, make sure you're getting something back of substance. The second rule that I teach every single one of my clients is when you're calculating what to do with your money, you must incorporate two things: loss opportunity cost, and in addition to that, economic events. Oftentimes individuals feel that when calculating money, it's always this mathematical linear formula, when that's highly unlikely. Right? We don't plan for worst case scenario.
That's
right.
right.
You got to plan for economic events. Right? Death of a parent, death of a sibling. Right? Child gets sick. You lose your job. You become disabled. So on and so forth. There's so many economic events that can happen that's sometimes out of your control, but you have to plan for it appropriately. And what's lost opportunity cost? It pretty much is if I give my money to $100 to this cable company, right? Over the course of a year, I spent $1,200 that I can't get back.
Right.
Where else could I have spent $1,200 that could have made me some money? For example, paying $1,200 to the cable company and putting it inside your retirement account, your 401k, your IRA, your life insurance policy, or saving money in the bank for a rainy day, or even turning around and saying, I'm going to save this money to purchase a house. Right? Lost opportunity cost. We spend trillions. The black buying power itself spends trillions of dollars a year. Right? But according to statistics, the bulk of us are in poverty or living below the poverty line. How? So the math doesn't make sense. Again, we have all this spending power, right? But they're saying we make the least because we're spending all the money that we have, and we're borrowing money through credit cards and we're trying to keep up with the Joneses, right? So there's so many things that you can do, but those are my two fundamental rules when it comes to investing. One, don't make a irreversible move with your money. Two, when planning for your money and what to do with it, you must incorporate loss opportunity cost. And also, in addition to loss opportunity cost, you must also plan for economic events.
Right.
Yeah.
Right. Now, should someone want to contact you, Karley, how would they get in touch with you?
I'm easily accessible on social media. I'm on Facebook as Karley Carto. I'm on Instagram as in Mr. Finance 25. Okay. You can always contact me in my office. It's 401 463-1336. Or by email, kcarto@financialguide.com. So I'm easily accessible, even if you want to just run something by me. And of course, no matter what you do, just make sure you seek out a qualified, licensed professional that can be able to gather information and create a detailed plan towards your specific needs. Although I'm giving out general information for individuals who are looking to start somewhere, it's always best that you sit down with a qualified individual, that they can gather the necessary information and make a plan that's detailed towards you. Because I live in this house here, but I don't have the same finance as the person across the street from me. Mm-hmm. We live in the same block. We may be friends, but it's our choices through our life that puts us in different places. Mm-hmm. And I don't believe in cookie cutter type of plan. Mm-hmm. Everything should be detailed towards a specific individual. So just seek the help, whether it's from me or from another professional.
Yeah, that sounds, very critical. What are the pitfalls? What are the things? You said spending, more than investing in yourself. Mm-hmm. But are there any more pitfalls? You said, buy a home. But I'm sure you have more advice on what type of home.
Yeah, yeah, absolutely. I always try to advise my clients after sitting with them to don't let their first house be a single-family house. Sounds absurd, but it makes sense. And there's a lot of reasons to that. One, the likelihood that you actually stay in that house and you're satisfied with that house for more than 10 years is slim. Think about it. By the time you're you're married, young kids, 10 years later, these kids are older. They need more room. So you're trying to expand your space. Right? It's not only until later on during retirement when everyone's out the house is when you try to reduce it back again. And you don't want to be held in that I have to sell this house to buy my next house. Right. In addition, remember, can I get my money back? Yes, you can get your money back when you purchase real estate, right? Because you're paying down your mortgage. If you sell it, you get the difference back. Mm-hmm. But if you have a multi-family house, a duplex, a 3-family house as your first house, what happens is someone's helping you pay your mortgage, mm-hmm. right? And if you decide to purchase another house, you can. You don't have to sell the current house you're in. Because when you go and purchase your second house, which is most likely going to be the house you're going to be in for quite some time, you still have this other house that's paying for itself. Right. And someone's helping lower that mortgage for you while you're paying down your mortgage here. It's just a way to be more efficient. It's about efficiency. Right. And I think that's something that we lack. Mm-hmm. That we're not efficient with our money. Mm-hmm. Right. We'd rather go and buy a $5,000 car. Mm-hmm. $7,000 car with our income tax money, right? But that can literally possibly get you inside a house, down payment. Right. There's so many programs out there too to help you with down payment assistance. Mm-hmm. There's wonderful organizations out there, mm-hmm. That are community organizations, CDCs, that are put there to help you, get these type of real estates or these assets. And there's even other educational programs out there to teach you more about your finance. I think the resources are there. We just don't, A, know where it is, or 2, just too lazy to go and seek them out. Mm-hmm. Right? It's kind of like individuals not asking for help.
Right.
Yeah.
Right. So, Karley, what piece of advice would you have for college students? Mm. People who are still in school.
2 advice. Read more books, but not books on your subject matter. Just books on life skills. Mm-hmm. I think in college, my biggest qualm with colleges, colleges don't prepare their students holistically for the real world and things that they will encounter. Mm-hmm. Meaning how to deal with your checking account, mm-hmm. how to purchase a house, to budgeting, to just health issues with parents, So I would say just do some reading.
Mm-hmm.
And when you graduate, do not
Google.
Yeah, Google.
Yeah.
Google. Yeah. And two, when you graduate, do not run from your student loans. Right. And when you file for bankruptcy, if you decide to go that route, your student loans don't get wiped. Always pick up the phone and call your creditors or whoever you borrow money from. Mm-hmm. They're more than willing to work with you. And it's easier to solve a problem when they know the problem's coming.
Yes.
Than to try to reverse a problem that has had a long length of time for it. So don't run from your student loans. Do some reading about just some soft skills and some necessary skills that you're going to need that's going to help you outside. And three, do a lot of networking. Mm-hmm. What someone once told me is it's not about your net worth, it's about your network. Mm-hmm. And that helps you to become more resourceful.
Wow, yeah. That's excellent.
Yeah.
On the loan situation, there's no shame. Mm-hmm. There are a number of programs for students who are working in the school system or for the Peace Corps. They can get their loans diminished mm-hmm. Through service.
Correct.
Everybody doesn't end up with a job when they leave their institutions. But, there are situations for hardship. And, that's why you can't run from them. Mm-hmm. And I can't emphasize that. It can be a little overwhelming. And, when you look back and you see in some instances, 20, 30, 40, 50, 60, 70, 80,000.
Yeah.
And you can't figure that out, And, they are willing to help and work with young people.
Yeah.
Now let's get to the middle-aged group. Mm-hmm. You did the 40. Now what about what's the advice for the 40 to 60 or 70?
See, that particular age group, there's a lot of variance of where they are. Mm-hmm. I've been in a lot of households where individuals have done well for themselves. And then I've been in a household where they haven't done enough planning. Mm-hmm. So then it comes to the point of trying to retire but not having enough. Mm-hmm. And that seems to be the big issue. And at that point in time, it's just trying to figure out creative, unique ways to fill the gap. Mm-hmm. There's always going to be an income gap. That one I can't give anything specific or anything general because it's never general. Yeah, it's tons of research and using different products and just calling on even other professionals to try to get the solution to this not so common problem. Mm-hmm. You see the same problems often, but their approach has to be completely different. Right. There's different factors. Yes. There's people's thoughts and feelings on certain investment products. Because sometimes an individual may have a bad experience, so they don't want to deal with a particular investment vehicle. Right. Although it may be the one that answers the question, it is the advisor's job to explain it properly and apologize for whatever whatever other advisor that they dealt with that gave them the ill feeling. Mm-hmm. But you're dealing with personalities, you're dealing with people risk tolerance, you're dealing with people time horizon which they actually want to retire. You're dealing with individuals who say, well, I don't want to live here, I want to go back to my country. Mm-hmm. Then you have to figure out, what's the laws there and Social Security. So that's so tough. I think that's a tough one. If you was late to the planning ball game, start to plan now. You know, start to get the ball rolling. Good thing is that individuals have Social Security that they contribute to.
Right.
On a non-voluntary basis. For my age group, I don't know if Social Security is going to be there, but I'm not banking on it.
Right.
But yeah, there's nothing specific except that if you're planning, at least revise your plan.
Right.
Right. There's individuals who have written wills in their 20s. The same people you put there or the assets that you have isn't the same will that you have in your 50s.
Mm-hmm.
So I think that would be my advice. Revisit your plan with an advisor.
Right.
Yeah, and if you don't have a plan, sit down with an advisor.
Right.
Right. Detail one out. Right. You don't want to keep running and don't know where you're going. Right. So that's pretty much how it is.
Yeah.
If you don't plan, you could be running.
Yes.
You start to fall into this cycle of just continuously doing the same thing over and over and over, and then it's like this daze you're in. But someone has to wake you up.
Right.
Yeah.
Right.
So just revise your plan, whether it's written or not written. Revise. If it's not written, definitely sit down with someone to have something written. Mm-hmm. If it is written, just revise it. Revisit it.
So, what else would you like to share now that you have viewers out here?
You know what? You have to keep some secrets. I think so I can be invited to come back again. I can't spill everything out right now, Karen. Then I won't be asked to come back. But next time we can become more specific on certain topics.
Yes.
We can go through case scenarios, right, for different age groups.
Okay.
We can do that also. So just in case someone's out there able to identify with this and they may have overlooked something, so they can go back and revisit with their advisor. If they want to come and reach out to me, we can do it that way also. But yeah, just remember, it's never about how much you make. It's about how much you save.
Yes.
Right.
It's not how much you make, but what you do with what you make.
Yeah, and how much you save, it's key.
It is critical.
If you make $100,000, your expenses is $99,000. You only make $1,000. Right? If someone who only makes $40,000 and their expenses only $10,000, they make $30,000. Mm-hmm. And that's a difference maker. Yeah. Right? We fall into this habit of making more, spending more.
Yes. Yes.
But no, we can have more detailed conversation. I think there's a such thing called the financial need pyramid, and we can evaluate each segment of the pyramid. The first segment is protection. Okay. The second segment is future planning. The third section is wealth accumulation, and the fourth section is just legacy planning. Mm-hmm. So as we come back and do different segments, next time I'll just deal with protection. And hound down on why protection is key, especially when it comes to investments.
Sounds like a plan.
Yeah.
Now, Karley, would you just tell folks how to reach you again?
Yeah, absolutely. So I could be contacted or reached via social media. I'm on Facebook as Karley Carto. I'm on Instagram as Mr. Finance 25. My contact information is office number is 401-463-1336. Email is kcarto, CARTO, @financialguide.com. So you can contact me in all ways, shape, and fashion in which you find the best one for you. Mm-hmm. Yeah.
Well, thank you, Karley.
No, thank you.
It's been a pleasure.
Absolutely.
It always is.
Thank you.
And we'll look forward to the next segment of our opportunity to get some financial advice from Karley Carto.
All right.
Carto Financial Group.
Yes.
Thank you.
You're welcome.
If I'm girl, I swear I love you. Anything I can do for you, yeah. You are the only one for me. If I'm boy, I swear I love you. I can't do without you. I said, baby, you are the one for me. I swear, so my mind to do it all. You fun, ain't nobody better but that only you. I take him to the altar, baby. baby, oh. I swear to my mind, to water. Boy, you bad and you make me mellow butter. Like only you are taking to my papa. Baby, oh, baby, oh. My beauty now play. Jada Carlo in my heart, you got to spare. You sweet pass, get away. My be, you know, feel me, my brain, then you check my head. Enough for nothing.